Okay, hello. I'm here. I wanted to do a trade recap for today, but even though I didn't trade, I didn't take a trade today. I wasn't even looking at the markets because I was busy this morning. But also, there was news 6:45 and then at 7:30 as well. So I probably wasn't looking to trade anything anyways. Um, but tomorrow morning I will be back and I will be trading tomorrow. Um, yeah, but went ahead and marked out my key levels. Our previous day high, previous day low down here, pre-market low, London session, Asian session, and then pre-market high right there. Um, so then we see market open on this candle here, 6:30. What do? We take our two candle range, mark it out right there between these two candles here. Um, Then next step, wait for a candle body close outside of the range, up or down, and target a key level. So as you can see, we had a wick out right here shortly after the second 5-minute candle closed. Um, and again, I heard yesterday, I watched a video on opening range trading, and he was constantly repeating a failed bullish move is the greatest sign for a bearish move, and vice versa. A failed bearish move is the greatest sign for a bullish move. So as you can see here, we had a failed breakout, and then a complete reversal within 5 minutes to the bottom of the range. So that might be something that I need to keep an eye out for. Maybe I can, start to look to catch trades like that, little reversals. Yeah, but anyways. Um, I just kind of wanted to go over this, and again, I didn't take a trade, but I was just analyzing the markets. And right here, 6:45, we had a candle body close below the range, but again, it was similar to, I believe it was the 6th or 7th, I believe, trading day. We had a similar candle, so it broke below the 5-minute range, but then clearly rejected. So buyers bought the candle all the way back up, and yeah, we closed, but it wasn't with a lot of conviction below the range here. And back in the if I would have been looking at the charts, I wouldn't have taken this trade, even though it would have been successful, because what I would have done is gotten in here at the candle body open, put my stops above the wick of the previous candle, so right here, and then targeted a 1-to-1, taking off some profits, stuff like that. So it would have ended up playing out, but we would have been in serious drawdown, about what is that, about 50 points of drawdown, something like that. So it would have been pretty ugly. Although, again, with this strategy, it would have played out properly. But me personally, I would not have taken that trade. So instead, we would have gotten a nasty, we would have dealt with some drawdown, then another bearish move. Again, we're just waiting patiently, waiting patiently. Even though here we might have felt like we missed out on a nice push down, we ended up coming back up. And when we come back up, this is the move that I would have got in on. We closed with a lot of conviction. We open up right after on the next candle, put our stops above the high there, and then target a 1-to-1. And the reason why I would prefer this breakout instead of this breakout is because here we have a huge push down and then a retracement in that 5-minute candle. Right here, we have a break to the downside, 9 EMA crosses over the 20, and it closed with conviction. There's barely any retracement right here. This wick is telling us that there's barely any retracement, whereas this wick is huge, and it's telling us that the buyers are coming back into the market. So here we close with conviction, get in at the open of the candle after the breakout candle, place our stops above the wick of the breakout candle, and then target a 1-to-1. Here we take off some profits, and then at a 1.5 or a 1-to-2, we take off the rest. Or we take off another couple micro contracts, and then you let your runners go, trail your stop loss, and then manage it, which would have returned, 1-to-3, almost 1-to-3 risk to reward. But yeah, it would have been a pretty decent trade, barely dealing with any drawdown. Whereas with this one, you would have been dealing with about 50 points of drawdown. Here, it would have been about 15, 20 points of drawdown. So, you just got to sit on your hands and again trust your analysis. But yeah, that was the trade that we would have taken. Again, we ended up returning back up into that 5-minute range, and we had some other breakouts play out again. But at this point, after 4 hours in the markets, I wouldn't be looking at the charts anymore. So yeah, so this is the trade that we would have taken today. It would have been a winner, although I didn't trade due to news, and that might be the reason for this volatility, for the volatility on this candle here, these candles. But yeah, we'll be back again tomorrow to trade, as there is no news no red folder news during the trading day. I mean, 5:30 pre-market. We'll see some, but for the most part, it should be a clean day, clean price action. Yeah, and I just wanted to, again, come on here and do a little chart analysis. Not really a trade recap, but just analyze the charts, see what we could have taken today, and yeah, that's the main content of the video. Anyways, yeah, we'll be back again tomorrow to beat the markets. We'll see ya. See you tomorrow.